Good morning, all. I'm Epstein with your morning flash update, and this update is for the morning of Friday, the 15th of November, halfway through the month already, 2024, 8:25 a.m. Central Time. You know, last night I told you that I think that the post-election rally had run into its bump, its peak for the moment, and we were going to go to the other side of the market. So far, I look right. The market is coming down here. Gold, which was $25.85 when news broke that Fed Chair Powell, and I'm talking late afternoon yesterday, had said that the Fed is in no hurry to cut interest rates, dropped away back into the 25.70 area, and now it's coming back up this morning. The dollar has gotten some reasonably good news this morning off of economic data. I'll show you what that is in a minute. Keep your eye on the Swissy. I think the 113.5 zone looks like a resistance area in that market. On the energy markets, you saw copper take off for about 700 points this morning. I told my morning subscriber people, don't trust it, because unless the energies go with it, it's more likely short covering than anything else. It's not that China changed anything. If China changed something, I think energies would be one of the benefactors. What else? Look at what interest rates are doing. The other way, going back to higher yields, and that's because the Fed put isn't there. In other words, the market backstopping the market. No, not happening at this point. So the Fed is saying, hey, we're just in no hurry. Markets may have to play around a little bit. In the bean market, keep your eye. I think the 1002 area is going to prove to be something of a resistance point. Now, let's talk about where we're at. Advanced retail sales. The U.S. consumers spend. They expected up 0.3. They were up 0.4. Now, it's not quite as strong as it looks because when you take out autos, it was only up 0.1, but they're buying the cars. And I think there'll be more of a rush on buying some cars. You know why? If President Trump removes that $7,500 credit on electric vehicles, a lot of people are going to say, I've been on the sideline, maybe I get this done right now and take advantage of that. I don't know if he'll take it off or not, but there's plenty of talk about it. The New York Fed Empire State Manufacturing Survey. Look at this. They came alive. 31.2. They expected it flat. The employment index, well, it's not as strong as the prior, but it did add to it, and that's a good thing. The new orders index really took off. It was a negative 10.2. Now they've taken off to the upside. Received prices up, about stable in prices paid from the prior month. Inventories up 1%. They had been down, up a point is the right way to say it. They had been down 7.5. But here's the thing, the shipments, they're shipping like mad. Is this the Christmas season? Could be. Import-export price data, well, we're exporting inflation. You can see the prior month it was down 0.7%. Now it's up 0.8. We're importing a bit more, too. The prior month was -4. Now it's a +3. And fuel prices were up 1.2, but they're all over the board always. Federal Reserve, U.S. industrial production capacity. Okay, a -3. They expected a -2 in the production. Utilization down a little bit. And then we went into revisions that are pretty big. -5 from a prior -3, and you dropped 1/10 in the capacity. We get business inventories today at 9, and you're going to get the soybean crush at 11 o'clock this morning if you're watching all that. But I think the biggest news has to do with what the Fed chair said yesterday, and what he's done is he put a shot across the bow that the numbers that are coming in still show an economy pretty good. His definition of the labor market is remarkably strong. Doesn't call for interest rate cuts automatically. So I think you're off autopilot on you're going to get a cut at every meeting of 25 basis points, and it just puts you now wondering, what is the next set of numbers? We're going to get PCE at the end of the month. Remember that. That's one of their favorite index. But then we're going to get one more PPI, one more CPI, and then mid-month you're going to get the Fed meeting. Right now, they took that number of a probability from roughly 83% that the traders were betting on the swap. The last I looked, and I looked at this morning at about 6, and it was around 63%. It had gone down to 58 last night. After these numbers right now, I wouldn't be surprised if it nosedove again. Want to remind you, and a number of you are taking advantage of it, our free offers, be it our QT Market Center charting software, you can do your own price points. My LTP, that's the ones I use right here. I have both, so I flip-flop back and forth between the two of them. Our trading kit covers so much of everything that we do. This is something you don't get anywhere. QT price counts. We mail them to you during the week, one a day, so you can see what it is. And then on the weekend, we give you all the markets so you can see where they're at. You just go to our website, iraepstein.com. You'll see on the top left, free offers. Click one of the blue things or all of them. And then you fill out your name, your email address. We'll send everything to you. It's iraepstein.com, free offers. If you're on your PC, there'll be an icon. If you move your cursor up there, give it a click, and away you go. I'll catch up with you this weekend as we review the weekly charts. And if any of you want me to cover something special on the Spider ETF, now is the time to ask me to do that, because I'll be doing them this evening. You take care. Take care.